I'm Anthony O'Donnell, editor of Insurance Innovation Reporter, and this is Life Accelerated, a podcast for life insurers who want to achieve digital transformation. Well, hi, Ellen.
Well, Anthony, nice to join you today in this terrific podcast opportunity.
Yeah, well, we're very happy to have you, and of course, it's great to talk to an old friend and somebody I respect so much.
Well, thank you.
So, Ellen, we've seen some very encouraging conversations, or we've heard some very encouraging conversations within the Life Accelerated series, and the pandemic seems to have been a factor in accelerating digital transformation in the life insurance industry. How would you say the industry is progressing in that regard? Is life insurance moving away from its reputation as a laggard in a laggard industry when it comes to technology?
Oh, absolutely. And, what's that truism, Anthony? Nothing like a crisis. Well, that basically was what spurred a lot of changed behavior on the part of consumers. COVID. Obviously, we saw record interest in 2020, record new business, double-digit sales increases, and sadly, record disbursements to beneficiaries. And all of that put pressure on insurance systems. That pressure is continuing, Anthony, because now we're in a very interesting danger period for the life insurance space. We've got the now it's the forever flu. We have a different attitude towards COVID. It's, we're caring about different things. And now we're in this very kind of critical, opportunity where I wouldn't call it an opportunity, a challenge, where some of these policies that we wrote back in 2020 are in danger of lapsing and us losing those customers. So, this is going to be an absolutely critical way that we're going to be able to use data and analytics, to hopefully anticipate and predict, who might those lapses might be. And sadly, this is in an industry where we already have, the secret shame of the life insurance industry that we have orphan policies. That's also amplifying this. So technology is going to play a huge role here.
And what about the effect of the pandemic on the way insurance companies function and the way technology progressed?
Well, work from anywhere, right? We no longer had swivel chair collaboration or engineering within, to solve technical problems, understand how a new bit of kit actually, operated. So, we had to work from home. And so, we obviously saw changes in the role of chat, other kinds of capabilities that were going to help ensure that we could use the new technology investments that, we rolled out to, accommodate changes in consumer behavior and demand for life insurance in 2020 and 2021.
Okay, and on back to the topic specifically of accelerating digital transformation, one of the things I like talking to people about is how they experience this in their IT shop, and whether the fact that work went remote and the fact that there was more pressure to deal with customers on a remote basis, whether that accelerated their digital journey, shall we call it?
Oh, well, I wouldn't say it accelerated the digital journey, Anthony. I think it changed some of the things that they prioritized. Certainly some of the things that we're seeing, in insurance, life insurance, technology priorities is, how can we speed up underwriting, as an example? And granted, yes, this is, functionality that, the paramed doesn't have to show up and, draw blood and stuff like that. But if you couldn't meet face to face, how were you going to be able to do that? And that was being driven by the technology organization. Thank you. Automated life insurance underwriting applications from, from many of the reinsurers. So, this is certainly one of the ways that, IT stepped up to, speed up underwriting in a time where we couldn't meet face to face. And, along with that, that was also fueled by capabilities in artificial intelligence, in RPA. So, also APIs and things like that as well. So, it was this kind of perfect storm of capabilities, both in terms of technologies that were coming to market, Anthony, but also in terms of use cases that COVID drew, forced for life insurance to invest in.
Well, what are some of the other technologies that are very important to the life insurance industry now? I'm thinking of things like cloud infrastructure. You've talked a little bit about data, and we'll talk in more detail as we get into some of our topics. But what would you say are the most important types of information technology for the life insurance industry as we go forward 5 to 10 years?
I got to say, Anthony, and you're hearing the same thing in your conversations with clients as well. I mean, who talks about on-prem now? Mm-hmm. So, hands down, the number one inquiry we have from any from any insurer here, whether it's P&C, life, group and voluntary, even brokers, is their cloud strategies. So, cloud first and foremost. How can we move faster? How can we be more agile and take advantage of all the capabilities that come in the latest release, and not have to worry about how it's going to map to our data and stuff like that. It's going to happen. So, cloud is huge. APIs, I mentioned them before, the glue that integrates both our systems with our data, but also external data, external solutions that drive better experiences for our customers, for our agents, our advisors, and our brokers. And then finally, something that's taken the place in terms of the sexiest technology out there, Anthony. The best way to describe it is replaced AI in terms of having that moniker. Low code, no code.
Right.
So how can we move faster? How can we put the ability to configure in the hands of business, the business teams, but careful here, governed by the technology organization too. So low code, no code. Huge area. But I also would say, Anthony, it's not just just in terms of configuration of existing commercial off-the-shelf systems. It's let's use a low code or a no code platform to build something that's going to let us test new products, get to market faster. Before we make a decision, do we bring it over to the mothership? So those are some of the use cases that we're also seeing around low code, no code. And I know we're going to talk about another really interesting one a little bit later on, so I'll save my powder for that.
Would you say that the low code, no code opportunity is also has a future proofing dimension?
Oh, absolutely. And part of the reason for that now, too, Anthony, is this came from some research we did back in 2019, is that when we asked insurance, application development teams, their thoughts on building versus buying, of course, which is now compose versus customize, the level of interest in, let's build something ourselves. We can manage it better. It will be less expensive for us than going out and doing a forklift replacement of what we have. So obviously what we're seeing is how could low code, no code be used to extend the capabilities of our existing investments, but also give us a competitive advantage with being able to create capabilities that aren't in the marketplace, that we can manage less expensively, which obviously, as we talk about the R word now, Anthony, anything we can do to think about, reining in, IT costs, is going to be important.
Well, let's look at some of the major market issues affecting the industry and then talk about how technology might help insurers to respond to them. And I think that'll give us a good background for the topics that we're going to discuss. So, first of all, how are demographics changing life insurance when it comes to consumer behavior, be that owing to age or cultural differences?
Well, a couple of things, Anthony. It's probably not a surprise to you. Who were the big buyers? I mean, obviously we saw big changes, thank you, in MIB data, back in 2020 and 2021 in terms of who was buying. But it was obviously your younger customers, first-time potential life insurance buyers, or people who were looking to add to the coverage that they already had. So millennials. So how do we, create an experience for them that's digital first, to get them, getting the assurance that, they and their families and their assets are protected during a time of great uncertainty. So that's certainly one. And then, the other one, and we're continuing to see that, you probably saw this in MIB's May data, that, the group that was now buying, applying were people 71 and older. So, perhaps I didn't have enough coverage. I didn't have any coverage, so this, again, this the recognition that life is not infinite yet. Got an older population to also buy. So those are the two areas that I see. First-time millennial buyers. No one's paying too much attention to Gen Zs yet, and an older population that may be underinsured.
Yeah. I would imagine that with regard to millennials, also there's a challenge and an opportunity to reach them when they're younger, to find ways of convincing them to buy life insurance, because obviously it's grim to say it, but someone can die at any age. But also it's much more economical to start getting life insurance when you're younger.
Anthony, we are absolutely seeing, lessons coming to the incumbents from the new insurance startups that are, how can we create a better experience for, a first-time buyer? But as I said before, I think one of the things that we need to pay attention to is, those millennials may be breathing a sigh of relief. I didn't develop long COVID, or I didn't develop COVID, and I'm now moving forward. But, we still need to engage with them. We need to engage with them in our systems to make sure that, they don't fall off, they don't lapse, and they're continuing to see the value of the relationship that they may have with their life insurer. So, there's a bunch of ways, obviously, that we're seeing life insurance firms kind of focus on that.
Yeah, and it occurs to me now to think that there's also a great opportunity to close the insurance gap. I mean, life insurance is notorious for not reaching a significant, or failing to reach a significant segment of the population. And no doubt automation can help to make it easier to distribute lower value policies.
Oh, absolutely. And again, you see even, Progressive dipping its toe in the water with, their 1-year term policy to let people basically try it out. So, on a digital platform. So, we'll see, it would be interesting to see how that plays out. But, that was, a very interesting move on Progressive's part. So, yeah, I agree.
So let's explore a little more deeply the effect of longevity on the life insurance industry. If 60 is the new 40, I'm not sure if that's the way they're saying it, if those are the numbers. But let's say that's the number. What does that mean for how life insurance is underwritten and sold?
Oh, Anthony, you're so, glass is half empty. 100 is the new 40. That's how you have to think about it.
If you say so.
100 is the new 40. And of course, that's having, huge implications in terms of, the kind of products that we're going to be packaging, who's going to be doing the buying. We have a report that's going to be coming out around, what, changing perceptions of old age are going to mean for the digital experience, for the products that we're going to be developing, but also for basically the surround roles around this. So obviously a lot of term life policies they end when you turn 100. Maybe they end when you're 120 something or other. Maybe we do something really interesting where we do this anticipatory shift of Ellen Carney's life insurance away from, basically the death benefit to the cash accumulation may go into something, Anthony, that's like long-term care or something that might keep me independent in my home longer. So we're going to see products change, and that's going to have some really interesting implications on how we underwrite this moving forward. And of course, all the moving pieces technically behind the scenes that are going to enable that to happen. This isn't my number. I don't know if you've seen this book from Joseph Coughlin, who runs MIT's Age Lab, but he's basically sized the market for what he calls the longevity economy. In the U.S., it's $8 trillion. Globally, it's $15 trillion. So a big market to pay attention to.
Yeah, a big market.
Guess what? Yeah. Older people have money. Older people have money.
Right, yeah. Right. A big market and a variety of ways you could attack it.
That's exactly right. So, sadly, and I know we're going to be talking about intermediaries in a little bit, but sadly, I'm not necessarily sure that this market is going to be something that's going to be served by kind of the existing state of our distribution intermediaries. I think we're going to see something different happening in the future. As we think about, 10 years out, how we're going to be buying and underwriting life insurance coverage.
Now let's talk a little bit about the customer experience. We've been seeing a shift in the insurer-policyholder relationship, and that's been affirmed by some of our Life Accelerated conversations. And we're seeing that shift away from an emphasis on the policyholder's mortality and toward their well-being and longevity. So what are your views on the shift and the importance of technology in recasting the customer relationship in that way?
Well, and again, we've been talking about this for a while. It's just this, and part of the problem here is, the intent of the carriers are really good here. Let's increase and improve your quality of life. Let's not think about life insurance as something that, is going to provide a beneficiary to somebody other than you. So let's think about the ways that we could improve the life insurance policyholder experience through wearables, or, even things like infrared, Anthony, around how we live in the home, and, just to kind of increase the quality of life. So, I think it's a laudable objective that a lot of life insurers have. The problem is, for many for policyholders, there's this kind of interesting thing where, we're talking about it from the future of insurance experiences where, as I had talked about, the policy might morph around Ellen Carney moving death benefits into long-term care coverage. But, it also suggests this, the requirement to, make a more intimate experience. So how do I, wearables is a great example. I mean, we're even now seeing things like softbotics and embedded chips that, would collect this information about us. So, that's kind of some of the scary things. At what point do we cross the line, Anthony, in terms of technology that makes people feel uncomfortable about being surveilled? And that's unfortunately part of the problem that we're seeing with some of the wearables. Is the goal is good, count your steps, watch your eating and your drinking and all that kind of stuff. And how do I say this? At the end of the day, no one wants to be surveilled.
Yeah, but are they willing to trade that for the benefit that they get? Because, certainly
absolutely. Yep, absolutely. Trade it for a discount in their life insurance coverage. We see that obviously, in the trade for your driving data for telematics car insurance. It's no different. So I'm willing to, share my data with you to some extent, provided I get something in return, and that something in return is typically a discount. But wouldn't it be really interesting if a life insurance company did something really, really interesting in terms of what that swap might be? And so, who knows? It could be something even more, an interesting synthesis of digital and genomics or biopharma or something like that we're going to continue to see over time. So, we talk about digital transformation. I think that, the kind of fourth wave is going to be this really interesting synthesis of digital and, things that we think about as living and organic.
I wanted to talk more broadly about how insurers can gain a competitive advantage through better customer experience. And, I can't help thinking when you mentioned the wearables that there's the question of having more interaction with the life insurance customer.
Yeah.
Right? I mean, there's no renewal. The policy exists until the person ceases to. But maybe there are all sorts of services that you could have. First of all, you could have more frequent communication, but you could also offer all sorts of services that relate to well-being, that help a person to have not just a healthier life, but a more enjoyable life.
That's right. Absolutely. And certainly one of the things that we're seeing here is just the overwhelming interest in all things omnichannel. So, this is certainly one of the ways that we can improve customer experience for our life insurance policyholders. And frankly, we're now seeing that extension, before death to the beneficiaries. Hey, let's loop the beneficiaries in as part of this, experience with their, who's going to be looking out for them, and their quality of life. So anything from an omnichannel perspective, Anthony, is crazy scorching hot. The business of insurance is all about relationships. Let's use the technology through omnichannel to, improve that relationship that we're having.
Yeah, so that makes me wonder about, first of all, about the technological challenges of achieving omnichannel. This is a, Herculean integration effort, I would imagine, to get all the data flowing in the right directions. The second part of my question here, or my suggestion is, I'm wondering about the importance of process re-engineering to achieve customer centricity. We talk about customer centricity, and this is an exciting conversation, but I wonder how far along the industry really is, and whether legacy culture is still standing in the way of digital transformation in the ways that we're describing.
Isn't it a wonderful aspirational goal, right? Process re-engineering.
Maybe I'm still being the pessimist here.
Well, I mean, what is the classic insurance, euphemism about the way we think about process here? We're going to pave the cow path. And that's basically what we've tried to do is instead of really engineering our poor processes to improve customer experience, improve agent and advisor experience, take out steps in our processes, we put our heads down. And there's also something that, in that kind of legacy culture, no one really likes to talk about, Anthony, and I'll be kind of curious about your perspective here. There's also this cultural factor in the business of insurance. He who has the most toys wins. And what I'm talking about here, Anthony, is that, if you are, as a business leader or a tech leader, have big budgets, have big head counts, are responsible for lots of revenue coming in, or frankly, lots of cost to the organization, well, you get to pound your chest a little bit. You're kind of a big deal. And, that in some senses kind of preserves some of this status quo. Is the fear of losing something here in terms of power and stature. I hate to say it, but it exists. So, I think some of this gets manifest in, the reluctance to make the right changes in terms of our slow, clunky, batch-oriented processes here that, stand in the way of delivering seamless, real-time customer experiences.
The bigger danger is the innovator's dilemma, right?
Yeah.
You're talking to people who don't need to be told how to succeed. They've done it.
Yeah.
Right?
Exactly.
And so it's a very difficult thing to let go of your wisdom and say, we to switch my metaphors, there's a danger of fighting the next war with the last war's tactics.
That's exactly right. And the benefits that the insurtechs have had, this, they started with a clean page. They don't have to go back and fix the past mistakes that drive tech debt. I think we'll see more attention to this now as we look at this, somewhat uncertainty in terms of, the economy moving forward. But, people don't think enough about, if I had to start the business over again, what would I do differently? What would this look like now? And that's really how they should be thinking about it.
Yeah, I like to think that it's very important to conserve what is essential to insurance, but that's not necessarily a process issue, right? That's
yeah.
Okay, let's shift over to distribution and about insurers' relationship not with customers but with their distributors. So the question to ask then is, what is the future of the insurance intermediary in a technological age? How much will technology reinforce the insurer-distributor relationship, and how much will direct-to-consumer grow?
Yeah. Well, we're in kind of an interesting tension, I think, honestly, Anthony, between carriers and distributors. I was at an insurer, here in New England for the day yesterday, and we had this interesting conversation at lunch. It's like, why wouldn't a young person want to come into the business of insurance? Why wouldn't they want to be an insurance agent? You spend 2-3 years building your book, and then you can kind of kick back a little bit. And thank you, renewals on the P&C side, it just kind of, chugs along. And so we were kind of marveling over the fact that, for some reason, this very cool business of insurance, taking care of customers, work hard for 3 years, and then you can again enjoy the benefits of your labor. Why that hasn't taken off? And unfortunately, I think a lot of the challenge is that we've seen digital and agent as either or, when in fact they need to come together. And you're seeing smart agents and advisors doing really cool stuff where they're building their own chatbots or buying their own chatbots. So hey, the agency's closed, and yet I know my customers have a question, so I want to put something in place that gets them get them the information that they need quickly. So you're seeing these smart agents, brokers, advisors, whatever term we use in whatever market our listeners are in, making the investments themselves in technology to improve the experience for their customers. And of course, what you're seeing from the insurance distributor relationship is how can we take friction out of the distributor's day. Share information with them. And again, it's a little bit, I scratch your back, you scratch mine. And, perhaps you're going to share some information if you're an independent about, your book and who those customers are. And, maybe, that's going to help me as a carrier. So, I think we'll see. And I know we're seeing, because we're getting inquiries about it, how do we improve the agent, advisor, broker experience using digital capabilities? And of course, part of the way we're doing this is, also, gluing our, our mutual systems together with APIs. Yeah.
What are some of the more interesting and possibly overlooked insurance distribution channels? There's been a lot of talk about embedded insurance. What's your take on that opportunity?
Oh yeah, well that's another scorching hot topic. Believe me, from an inquiry perspective, seeing less a little bit on that from the life insurance side in terms of kind of the broader market, Anthony, but that's going to come. Bestow published their API just a couple of weeks ago, so it enabled, frankly, the farm stand down at the end of your street, Anthony, to be able to sell life insurance to you if you wanted to buy, it. So basically, they become insurance companies in a box. And, you have new distribution channels, with embedded insurance. So, who knows? This may be something from your mortgage originator. Yes, you're buying a new house. That's certainly one of the trigger events that we see that precipitates, the investigation and the purchase of life insurance. I've had a life event. I've gotten married, had a baby, bought a house. So you could see some of those, trigger opportunities, as an opportunity to embed a life insurance quoting or sale opportunity. Of course, this is going to be, some of our best risks that we're going to be able to do this with, but, we're going to see that. The other really interesting area is kind of a classic space, that we all remember from, the 1980s before the internet, Anthony, and the only way we could get discounts on any of our insurance coverage was through a membership organization or an affinity partner program. Our alumni association, I'm part of the AMA or the AICPA if I was an accountant. And, I could, get discounts on my life insurance or even my professional liability coverage through an affinity marketing program. So, we may see, kind of a swing back in that pendulum to affinity and industry marketing partnerships moving forward, sort of thinking along the lines of what ADP is doing for their, payroll processing customers. Oh, by the way, not only will we process your payroll and do your taxes, but we'll help you manage your, human resources. And guess what? We'll sell you insurance as well. So, affinity, embedded, the line is getting kind of blurry between the two.
Yeah, and it seems that partnerships are going to be very important, and there's going to be a lot of competition for who works with whom in order to distribute their life insurance products.
Well, and Anthony, there's a risk associated with that, right? And, there are a couple of companies that we can think of off the top of our heads who do a really good job marketing this. But, the insurance industry writ large spends billions of dollars on marketing their brands to consumers. But what happens when you become an ingredient brand? Yeah, Intel Inside, that's really
right,
important.
Right.
Or BASF, we don't make the products we use, we make the products you use better. That will be the kind of branding that we see in these embedded and, embedded models moving forward, where we kind of, unfortunately, disappear into the background and, basically the lead partner on that embedded product, the farm stand down at the end of the street, maybe who the consumer is thinking about, that's who I get my insurance from.
That's interesting.
That's a real risk. Yeah.
It's a risk, but one also has to think that if you have a huge life insurance brand, the household names, that's also a selling point, because you want to have a reliable financial service institution behind you, right?
Yep, absolutely. But you have to know that that's what the brand is behind the embedded
right.
product.
That's right.
Yeah, that's going to be key.
Okay, so let's go back to the big technology issues.
Sure.
First, let's talk about technology spend. What's the technology spending benchmark today for life insurers, and what does it say about their commitment to modernization?
Well, I can't give it specifically for life insurance, Anthony, but I can certainly give you the insurance industry overall. So, and this is our latest data. Insurance companies are spending about 3.25% of their revenues on anything to do with tech. And it's split 30% change the business tech, so the stuff of innovation. The kind of new cool stuff that we're investing in our innovation labs, and hopefully that's getting turned into things that are going to be commercial and scalable for the organization. Sadly, the other 70% is, keeping the lights on.
Right.
And that's going to be in real danger as we look at, more precarious economic times. So we obviously need to think about how do we reduce tech debt? How do we shift some of that funding from just keep the lights on to really change the organization innovations that going to deliver better differentiating experiences for our customers and separate us from the competition.
I have to say, this gives me a strange feeling of deja vu because I'm pretty sure I heard that same figure in 2005.
Yeah, that's fairly consistent, Anthony.
Yeah,
it's unlike anything that we see in the broader financial services market. Just to give you a sense, cap markets, it's about 11% of revenues. They plow back into tech. So, unfortunately, we're not probably spending enough here. But the good news is during the pandemic, unlike we saw other industries, insurance companies, overall, managed to still increase spend. It was about a point and a bit, but it wasn't a negative growth spend, during the pandemic. So continue to spend.
Well, let's say we're spending the same. I mean, I can remember hearing throughout my career of the figure of 3 to 5%, five being really on the high side. Yep. But maybe there's some opportunity with the advance of technology to do things more cheaply, to do them with less risk, to waste less money. We were told that I remember back around the time frame of 2005, we were in a bit of an economic downturn, and the mandate was to do more with less. Well, I mean, the whole point of automation is to do more with less.
Well, and that's kind of our situation, right? Just from the standpoint of, we want to do more with less. We're going to do automation. Unfortunately, a lot of the automation, at least the first wave of automation, took care of those low-hanging use cases, Anthony, right? So, will RPA, the really basic stuff, routing emails is an interesting example. Let's use RPA to do that rather than humans. So we tackled a lot of the low-hanging fruit from an RPA perspective, then took a breath from an automation perspective and thought about, how can we, change this very different market that we're working in now that we've got we've tackled the really basic stuff. How do we look at more sophisticated kinds of automation? And that's some of the things that kind of fit into Forrester's future fit strategy. So, how do we improve the health of the organization now that we've, done the basic stuff and, it's changing the future of work basically in insurance where we work, shoulder to shoulder, side by side with a bot that, is going to help us process more business and free up the human, to do the more human empathetic things that they're better at. So, those are some of the kinds of, technology changes that we're seeing in this kind of new market where, it's not a pure efficiency play that we saw with RPA, 10 years ago, or it's not 10 years ago, 2017, 2018, 2019. Now it's how do we make the humans more effective in the way that they're engaging with, the other humans in the loop.
And also the dimension of, I guess we could say the next wave of RPA is what some people call intelligent automation.
That's exactly right.
Yeah, so that it is automation, right? And it can involve the human part that you mentioned a moment ago, but it also brings in the capacity for routine decision making that can be done on an automated basis.
That's exactly right. Yep. And I have to say, the fear and certainty of, am I going to lose my job? We're not seeing that. But basically what we're seeing is, people moving around into new, more interesting roles, stretch them a little bit from a career perspective. But, I've not heard layoffs for things like, intelligent automation or, even automated underwriting. We've shifted people into, new, more high-touch, customer roles within the organization.
Well, that suggests the question about the Great Resignation. I was at a conference last week, and there was a discussion about agents fearing a new round of disintermediation, the whole direct-to-consumer discussion, and also increasing automation elsewhere, threatening other jobs. So then that's the question. I guess you've begun to answer it. I'd thought of this as whether it was a problem or that the greater problem is one of recruiting people to insurance jobs.
Yeah, I think it really is less in insurance, Anthony. The Great Resignation. I think the Great Resignation might have happened before, but and it's happening in other industries. But I would call it more of the Great Shift. It's we're going to move you into new roles. We're going to give you more challenges. You're going to learn new things. And it's we're in an interesting time of change in the whole insurance industry, not just life. And so, what is this going to mean for us as we move forward? So, you'll be pushed, you'll be stretched, you'll be tested in some of these new capabilities and the kind of the role of distribution. But as we had talked about, the agent isn't just going to be coming in with a briefcase and popping it open on the coffee table or the kitchen table. They have new illustration software. There's e-apps. There's going to be new capabilities for them to interact with an underwriter. So it's going to completely change their daily work experience.
How are life insurers making progress in de-risking technology initiatives through both implementation methodology and the advantages of newer technologies like low code, no code?
Well, Anthony, you and I have both been around long enough to know that, the insurance industry is an industry of junior high school girls. Bad news gets out fast. Everybody knows when something has gone off the rails. So, I see, what life insurance carriers are doing is, we may be doing a core system replacement, but we're not going to do something, we're going to replace everything at one time. We're going to do complementary capabilities. So I may do, my core. I'll worry about, my underwriting later. I'll worry about claims, at another time. So, you're seeing, more methodical. The other thing that I also see, and, this isn't always necessarily the greatest news where, you had a lot of technology providers see opportunities here where, basically, the overall opportunity for customization, paving the cow path or decorating it with, some really luxe stuff, that's kind of gone away. So, from the perspective that I see is let's get the best value out of our partners for our systems, but let's limit the customization to the bare minimum, and we'll approach it in different ways. An API perhaps instead of customizing something. Let's go see in the marketplace what's there to deliver a differentiating value and help us reduce risk associated with modernization projects and obviously reduce the costs associated with it. Got to go open. Got to go open to anything APIs, honestly, Anthony, with your eyes wide open. It is not 2-click downloads like a mobile app. There's more to it than meets the eye, as I had said. But, this is certainly some of the ways that we see, digital transformation, core modernization, advancing, the nature of that chassis, that the life insurer is trying to put in place that's going to deliver something that's delightful to their agents and advisors, and especially delightful to their policyholders.
Well, maybe I can be more the optimist here and ask the question bluntly: is the life insurance industry wasting less money now? Is 3% IT spend from the overall operating budget the new 5%?
I think it really is, Anthony, and I think that was, brought on by the attention of tech debt. It makes no sense to plow investments into, again, paving the cow path that's not working. Let's go back and, again, shift that, keep the lights on funding into things that are going to deliver meaningful change for us as a life insurer. In the way we're, as I said, customer experience, agent experience, and employee experience, and position us for the future. As I said, the top priority for insurance organizations is how do I build for growth? That's what they need to be thinking about, not, how do we fix up what, is, we made some bad decisions about years ago. How do I build for growth moving forward? And, what's, in the marketplace that's going to help me, preserve that investment that maybe I wasn't really smart about or smart enough about because I was hasty. I didn't do a good enough job on my requirements definition, and, some of the things that we see, Anthony, you've probably heard this from some of your other interviews, is the business is in a big hurry. You got to get them to slow down and think about what they really, really want. And so, that's certainly one of the ways that we're seeing is, more than cross-functional groups is, real deliberate, strategic thinking about what the objective is that they want, how they're going to get there, and then making the technology, investment plans after they, figure all of that stuff out. Where do we want to be? And how we're going to get there. And, then we'll start opening the wallet.
Well, and with a more iterative process like agile, you can. It's an easier task or a more stable task to maintain alignment between business and IT.
Oh yeah, I mean, I think the days of 7-year core system replacement projects is over. If you're not delivering value in 2 weeks or 8 weeks, where that's appreciable and measurable and is just propelling the business forward, well, it doesn't make sense to make the investment.
Well, that 7-year figure just ran a chill up my spine.
But you remember those days, right?
Oh yes, I certainly do. Okay, I just one more broad technology question. It's one I feel I can't really fail to ask, even though we've been talking a long time, and the temptation is that I could talk to you for hours. But one of my favorite topics these days is that while the InsurTech movement has been significantly focused on the front end, data innovation is poised to make a more essential impact on this data-driven industry. I mean, we've talked quite a bit about product innovation. Yeah. So how do you see the importance of data to life insurance innovation?
Well, it's going to be critically important just from the standpoint it is going to be really, the differentiator for insurance organizations, and not just the experience, but, what data are we capturing, what's getting exhausted through all the different sensors that we're seeing, 5G networks, edge compute devices, edge AI, all of that kind of stuff. What are we going to be able to do with these capabilities from a personalization standpoint? That are going to make a life insurance product less commodity. So that's to me what I see is how we can use data to create more personalization opportunities, and frankly, in some senses, as long as it's not creepy, provide better advice and counsel to our life insurance policyholders. And this is something, God, we saw years ago. I don't know if you remember this company, Anthony, years ago, based out of Minneapolis. But they had an interesting data play that they were making that we can predict within 6 months when you're most likely to die in natural causes. It's like, holy cow! Think about that from an underwriting and an annuities perspective. What you're going to be able to craft with that, but. That kind of stuff is now not beyond the realm of reason. Do you as a consumer want to know that? Gosh, no. But you as a life insurer sure do. So, it's new experiences, it's new products, it's, better
new services,
better underwriting.
Mm-hmm.
Yeah.
Yep.
New services, non-insurance services.
Right.
You can absolutely imagine the life insurance marketplace getting into the caregiving business. We've certainly seen that with, financial planners. Targeting, home pack-up services for empty nesters. So we're moving into kind of crazy cool services that, complement the insurance relationship but are not necessarily strictly insurance. And this will be fueled by data and analytics that are going to identify, when a big event could be happening.
Thank you for joining us for the Life Accelerated podcast, undertaken by Insurance Innovation Reporter in partnership with Equisoft. For more relevant content to help you achieve digital transformation, please visit equisoft.com/lifeaccelerated.